stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs by Neena, Mishra. And we have a couple interesting stocks this week. A little bit, not totally off the grid, but a little bit. We have a retailer and a wellness brand. What are those? So we're going to start with my wellness brand.
Sure.
And the problem that it's had is no one knows what WW is.
Right.
So the ticker is WW, and it used to be Weight Watchers. Last year they decided to change the name after 50 years, and it was a complete disaster because the customer was so used to the Weight Watchers imprint that number of subscribers went down, earnings went down, the whole thing was not good. So I brought a chart to show what it looked like after after they announced the name change, and then those earnings just plunged down, as did the stock price, as you can see. But the good news is, because they have a secret weapon, things are looking up now. Right, exactly. Oprah is their secret weapon.
Yes.
So she had bought a couple of years ago a 5% stake. They put her in the ads, and that's where you see the chart going up there back in 2016 into 2017. Then they pulled her back off the ads. They changed the name. Not good. So they brought her back on. So she's back on some of the ads. They've seen a turnaround in the number of subscribers because you don't mess around with the power of Oprah, basically.
Yeah.
And now they're actually rolling her out in a 9-city arena tour to start the new year in January and February, which is key weight loss, dieting, like time of the year because of New Year's resolutions.
Right.
So she hasn't done an arena tour in 5 years. This will be a wellness type of tour, so it's really going to focus on the brand, get away from the whole focus on weight. And so I really like the stock here. As you can see, people were not believers until recently. It did bounce off these lows in July and August here, and now is getting a little bit of a bid, but it's still down 50% over the last year.
Yes.
Well underperforming, but the estimates are starting to come back up because they're seeing growth again in the subscribers, and it seems that they've survived the rockiness of the name change now, and that they can really focus on what they're doing with the business, which does have some interesting innovations. Not only were they the first company to kind of have the meetings and the connection that people could make for going to their weight loss meetings, but now they have a great app that they're really building the community on.
I haven't checked out the app.
Yeah, so that is a good way for them to still incorporate the connection part with the brand, and you don't have to necessarily go to the actual physical meetings as much. So things have changed somewhat.
Okay.
And they're also rolling out, which they've been doing for a while, a lot on the recipe side, and obviously anything with the wellness angle. So estimates, like I said, are on the upswing. Shares are still pretty cheap. They're trading about 18 times.
Yeah, this chart makes the shares
after this big sell-off.
very interesting.
Right, and even with the estimates being cut, it's still fairly cheap. So I like it as a value stock. I do own it in the value investor portfolio, and I think we could see some further upside here, especially as momentum begins to gain strength off of Oprah.
I agree. Education is important. Education about the brand, the reason behind the name change is important now for
and
the
no one
company.
does it better than Oprah.
Than Oprah.
So,
I agree.
Don't bet against Oprah here.
Yes. So I have Target. My pick is Target, and it's not been easy for retailers in
this is daring.
Age of e-commerce and Amazon's dominance. But last few weeks have been pretty good for retailers. Walmart, Target, Lowe's, Nordstrom, they all reported very good second quarter results, and their shares went up. Target in particular, Target shares surged more than 20% after they beat on both the top and bottom lines. And analysts have been increasing their estimates for the company. You can see 11 estimates increase over there, a nice bump in estimates for the current year and next year. And this better than expected results for Target was mainly due to a number of initiatives they have taken over the years. They have introduced this smaller store format.
Okay.
They have improved their digital business. The online sales have been pretty good.
Okay.
And they have introduced same-day delivery also. So they are offering some value and convenience to customers. So that
now, one of the things I find most interesting about them is that Walmart tried that smaller urban format.
Yes.
And they basically failed.
Yeah, Target has been able to do that successfully.
Yeah, so that's what's interesting to me, that everybody said, oh no, these discounters can't go into the urban cores, but Target, it's been great.
Yeah,
so,
especially in college cities, it has been very successful. And recently they announced a partnership with Disney.
Okay.
So they would be opening 25 Disney stores in Target location by the end of this fall. So that is going to be interesting.
Yeah.
And for the holiday season, they today announced that they are hiring more than 130,000 seasonal workers. That's a big jump.
Can they find that many people?
They will try to find, so we will see.
Okay.
And another important initiative that they took is everyone is worried about the impact of tariffs on consumers, because we think that ultimately consumers will have to pay. But for bigger retailers, they have more power. So Target is asking its suppliers to bear the cost, not to pass it on to the consumers. So we'll see how that works out. And on this slide, I have this interesting chart.
Wow.
So this is versus the broader retail ETF, which you can see almost flat this year, whereas Target is up more than 65%.
Wow.
So this is an interesting chart.
It is.
So in the retail industry, I guess it's going to be between have and have-nots, maybe Target
stock pickers market.
Yes,
instead of buying the whole industry.
The whole industry. So maybe Target and Walmart are among the retailers which can survive in the Amazon era.
Yeah.
And it's a ranked number 2 stock as of now.
Okay. So these are a couple interesting names, and we're going to keep an eye on them as we go along into the holiday season and the dieting season, I guess I should say. It's around the same time of the year. What does that
it would be an interesting time to watch both the retailers, both the companies.
Yeah. Okay, so those are our top stock picks for this week, and be sure to join us every week because we're bringing you the best of the Zacks rank here every week on Zacks.com. Be sure to check in and don't miss a single one.